Welcome in, folks. Busy day for me here today, okay? We got to speak about Fubo. Fubo TV, it's a speculative stock I own. They are suing Disney, Warner Brothers, Fox. We're going to speak about that, what's going on there. It's a massive lawsuit situation going on there, so we'll speak about that. Then I want to go ahead and get into Tom Lee here. Tom Lee, this is from 6 hours ago. Patient money is the money that's been working the last few years. Looking forward to getting that one. And then I want to hear what he has to say in regards to these Nvidia earnings, which, by the way, if you're watching this, is a decent probability I'm already live on Twitch doing my 3-hour Beast live stream on there for Nvidia earnings, Cheesecake Factory, all those other companies. That's pinned comment down there if you want to join me over there on Twitch, okay? By the way, I'll ask in return, smash a like, make sure you subscribe to the channel, folks. We are now over 40,000 subscribers, so I appreciate every single person that's subscribed here to the channel, okay? So, Fubo is suing to block a sports streaming service planned by ESPN. This is interesting, and I saw this coming. I told you guys, what was going to play out here. I said they're going to get it from two sides. They're going to get it from companies like Fubo, who there might be others that join in here, and they're going to get it from the government. Sports-centric streaming service Fubo TV sued the media companies behind the new sports streaming platform scheduled to launch this fall, alleging they wouldn't let Fubo carry a small bundle of sports-focused channels that they are now looking to include in the new service. The lawsuit, which was filed Tuesday in the U.S. District Court of Southern District of New York, seeks to block the joint venture among the companies, which that was Fox, Warner Brothers, and ESPN parent Disney. The suit also is asking for a jury trial and punitive damages. Ooh. The companies behind this planned streaming service are using, quote, their power over commercially critical sports content to force Fubo to broadcast unwanted, expensive content that prevents Fubo from offering the sports-centric package of channels that its customers want. Wow. These companies got themselves into a real pickle. That's all I'm going to say about that. This is like the best thing that could have ever happened to Fubo. It really is. It really is. Shares in Fubo, a 9-year-old streaming service with more than 200 channels and 1.5 million subscribers in North America, have fallen about 20% since plans for the new sports streaming service, were announced. Fox and Warner Brothers Discovery didn't respond to requests for comment. ESPN declined to comment. Fox and Wall Street Journal parent News Corp have comment ownership. On February 6th, the companies announced the new sports streaming service would carry 14 networks, including Disney's ESPN channels and its ABC network, Warner Brothers TNT and TBS, and Fox's broadcast network and sports cable channel. The Justice Department, DOJ, plans to investigate whether the joint venture involving the three competitors would violate antitrust laws. It likely will, in my opinion. We'll see. The government is likely to aim to complete the review before the new streaming service is offered to consumers, a person said, in regards to the matter. In the suit, Fubo said it is being charged above market prices, and said the creation of the sports streaming service would increase the media companies' incentives not to make their content available to Fubo and others, 100%. Not just Fubo, but YouTube TV, satellite companies, traditional cable companies, all of them, right? For decades, defendants have leveraged their iron grip on sports content to extract billions of dollars in the super competitive profits from distributors and consumers. Defendants earned many of these profits by bundling their commercially critical sports content with other less desirable content, forcing sports fans to purchase channels they did not want. Yeah, that's 100% true. So, ooh, baby. Ooh, this is going to be interesting to see how this plays out, folks. Now, this has gotten a lot of talk out there. They've been talking about it on CNBC a decent amount today. They had this gentleman on, David Blato, the former FTC policy director and former trial attorney in the antitrust division of the Department of Justice. And the way he was talking, it sounded like Fubo's got a pretty strong case here, and that, companies like these guys have been, being problematic for a while. Let's just call it that, okay? So, the moral of the story is, does Fubo get a fortune from this lawsuit? I don't know about that. But what I think the streaming service platform they want to do, I think it's dead in the water. I think there's a low probability that's ever going to see the light of day. If it does see the light of day, I'd be amazed. And then they'd be in a situation where they're going to have to give companies like Fubo and others very competitive rates from here on out. Or they're always going to have that on them, and next thing you know, when negotiations go to happen, Fubo can then go ahead and do another lawsuit saying they're not giving competitive rates because they want everybody to be sucked into just their streaming service that they have over here. So, I think this was a really huge blunder, in my personal opinion, for Disney, for Warner Brothers, for Fox, for all these guys. I think they made a big mistake here. And so, I think it's starting to show. And I thought this was going to be a mistake from the get-go. I told you guys, I think this is going to get messy. And sure enough, now all of a sudden, next thing you know, Fubo's got this lawsuit. I wouldn't be surprised if others join in, maybe some cable company, maybe some satellite companies. Does Google join in? We'll see. And so, and obviously the Department of Justice is now looking at it. It's a mess, folks. It's a mess. Alrighty, let's get into this one. Patient money is the money that's been working the last few years. A couple Tom Lee videos here.
Expects stocks to draw down at some point in the first half, but hasn't seen the signs of a near-term top. Let's bring in Tom Lee, managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. I referenced our conversation. We weren't in makeup per se. Sometimes we talk in makeup. This just happened to be outside of the makeup room.
Yes.
But we're still talking. I like it better when we're actually sitting down and sort of, I feel like that stimulates me when we're both. Not really. You said immediately there's some dry powder left. It's not over yet, although there are some signs of fatigue.
Yes. I mean, we've rallied 16 weeks, up 23%. The last two sort of long rallies were 16 to 19 weeks and 21 to 22%. So it's mature, but we don't see the signs of the tops. Normally, like margin debt is only $700 billion. It was $900 billion in October 21, and there's still $6 trillion of cash on the sidelines. And even this week into Nvidia earnings, I kind of see the stock kind of weak into the report, which makes me think the stock could surprise to the upside. And I think that would sort of help us get some more juice on the upside from here.
That's interesting. The one of your calls, which and I remember at the time we just said stop doing that. It was like a weekly call for the S&P based on an inflation number, on a friendly inflation number. Last week we did not get friendly inflation numbers. But do you think that the trend is intact?
Yes, I think there are some difficult seasonals. Because, companies raised prices in January. That made January look like a hot CPI number. And I think February CPI, which comes out next month, is going to reverse some of that. And it's going to put investors in the bond market thinking inflation is falling again. So.
Oh, my God, that'd be a great time for another one of your calls. If you hadn't sworn off making a call on where the S&P will be in a week, that would be a good time to do it, but don't.
Yes, I've promised myself not to do that.
Okay.
But can I just ask one question? Given this sort of short-term bearish, would you call it short-term bearish?
Well, I think there's going to be a moment where investors have to get cautious. But it's a maturing rally, so I don't think this is.
So I guess the question is for those folks who are sitting around with cash right now. Everyone's always trying to figure out, I have a little cash. If they have cash, what am I supposed to do? Are they supposed to wait for some kind of grand moment to put it in the market? And of course, timing is always sort of a challenging thing to do. Are they supposed to put it in Bitcoin? I know we'll probably get there in about a second. What would you be doing with your money if you knew things were about to get worse and not better?
Well, we know markets have a pretty good 12-month runway from here, and I don't think investors should be 100% cash. I think if they have been sitting on cash and missed a lot of this 4% move, I think they need to dollar cost average. Put a little bit in on weakness, and this has been a kind of a weak week. And then just be patient. I think patient money is really the money that's been working the last few years.
But you don't think that that the Fed needs to stay tighter longer because inflation is still a major problem? You think that we will get some rate cuts this year?
Yes, and I think again, I know the statistics don't show it, but I think the job market has weakened a lot. One of the big drivers of inflation for the past 8 months has been auto insurance, up 23%. I'm not sure monetary policy really gets auto insurance rates down. It just has to play out. And housing is starting to really come out the other side, so we can get lower inflation.
Is it still get a soft landing, or is it getting harder?
I think the economy's actually stabilizing, and then if we get lower interest rates, it actually really stabilizes the economy.
So massive flawed thinking there, okay? Massive flawed thinking. So listen, this whole thought process, and this goes through people's mind all the time of like trying to time it perfect, and maybe I should wait a couple weeks, maybe the market's going to pull back, I'm going to invest in. It's just such a flawed way of thinking, okay? At the end of the day, you should be trying to buy stocks a minimum of twice a month. That's like always the thing you got to think of in your brain. You need to be buying stocks a minimum of twice a month, every month, regardless if the market's good, bad, not doing anything, recession, no recession, great economy, bad economy, so-so economy, high inflation, low inflation, mid-inflation, whatever. You need to be buying a minimum of 2 times per month. If you can buy every single week, great. That's awesome. Thumbs up, okay? If you can buy, every other week or something like that, or every third week, okay, fair. But that's the name of the game, okay? There's always great opportunities out there every single week, and you got to be there to take advantage of those opportunities as a long-term investor in the market, which is where your focus should be, right? Next up here, Nvidia earnings will expose how much firepower is left in the market. Ooh, okay, Tom Lee.
Bring back in our friend, Fundstrat Managing Partner and Head of Research, Tom Lee. Are we wrong to say that Nvidia matters to the overall market?
NVIDIA is hugely important. A lot of eyes are on tomorrow, as you said, and it's going to be very telling us about how much firepower still exists in the market. If NVIDIA has a great report and rallies, I think it's going to confirm we're not really at the top of the first half 2024 market top. But there's an equal chance that NVIDIA has a great number and the stock sells off. And I think that's going to tell us perhaps a lot of the buying power is used up. So I think it's very important.
Yeah, here's the thing about NVIDIA, and I'll give my take, and you say no, sell it.
If NVIDIA sells off in any substantial way, and they report great numbers and great guidance, I might step in and buy the stock.
As usual, which is...
I might.
NVIDIA will probably beat street estimates on EPS and sales. Okay, they do every quarter. It's a measure, I suspect, of obviously the guidance matters a ton, but how much they beat by. This could be a time, Tom, where we see a company blow away estimates and it's still not be good enough.
Yes. Anecdotally, I'm finding a lot of our clients thinking the company is going to beat and sell off, which tells me
exactly what I just said.
Yes.
Which tells you
and
the
that's
opposite's
why
gonna happen.
I actually think the bigger surprise would be NVIDIA rallies tomorrow, and it shows there's still legs left in the rally of the first half. But that's just an anecdote.
How much matters in the guidance versus the actual quarterly numbers last quarter?
All of it's going to matter. And as you know, because a lot of things have been priced into it, people are going to look for little wrinkles and, blemishes. So a lot is priced in. But, I think if there is a sell-off, I actually think it's going to be viable for the most part.
And you've been bullish. You've been right. You've been out there with there's like a couple of you guys that were on your own island for most of 2023. It's a very lonely place, by the way.
Yeah.
But you survived, like Tom Hanks. You had a volleyball as a friend, and you've prospered. You still remain bullish for the year.
Yes.
Is NVIDIA the biggest risk to the market? Is the Fed the biggest risk to the market? Is the election the biggest risk to the market? We have to factor in the macro stuff. What do you think most about?
I think the Fed's the biggest risk because
I disagree with that. The election is actually the biggest risk to the market, in my personal opinion.
It needs to broaden, and it's going to broaden when interest rate cuts start to get priced and investors begin to think about that roadmap. And if inflationary pressures don't ease and the Fed starts to sort of second guess that, I think it puts a lot of pressure on stocks.
Is there a not zero chance, or is there a zero chance we get a rate hike this year? People are now starting to talk about that again. Or is that a 0% chance in your mind?
I mean, I think that the probability is low in actuality, but the market could get concerned about it. And if it does, that would put pressure on stocks. And
January is 1 month doth not a trend make, as you know more than anybody. January's numbers were hot. We saw in the early 80s, late 70s, inflation can look like it's whipped and then it comes back up, right? We saw that again. It can be sticky, as they say. If we get more hot inflation data for February, does that hit stocks? Because now the Fed is suddenly back in play again.
I mean, I'd say it's really bad if inflation's hot in February, because how would you convince the bond market and the Fed that inflation's falling? But that would not be our central view. I think there was a lot of one-offs and even, bad seasonality that makes January CPI look hot. I think February CPI could be quite soft, but it's too early still.
Where's the best place to make money in the stock market right now?
Well, I think if someone is saying, where's the best risk reward, I like small caps because their valuations are attractive. Price to book is still 44% of the S&P. That's still the launch point where they were in 99. They're big beneficiaries when the Fed starts cutting. Expectations are low, and actually delivered earnings haven't been bad. So I think it's good risk reward, but tomorrow,
we've been there before. The valuations you cite have been there, and people have ignored it. And I do wonder, and I'm going to tick off half the audience or more right now, if the Mag 7 sells off, the S&P is probably in trouble because they're so huge, right? But that means people are raising cash. They're selling, they're taking profits, they're raising cash. Could a Mag 7 sell-off be the best thing for the small caps?
In a way, because you're right. Russell 2000 is 8% of the S&P, so it wouldn't take a lot of reallocation into small caps to make a big move. There's still $6 trillion of cash on the sidelines, and margin debt is way below where it was in 2021. So I still think there's a lot of firepower in this.
Yeah, I think.
So I'll be honest, watching that made me want to buy Nvidia. These earnings, I'll just be honest with you guys. I'm just like, oh man, because I feel like if they come in with great numbers and the stock sells off for any reason, I think it's just going to get bought right back up. So yeah, man. Ooh, we'll see. Okay. All right, guys, I'm going live on Twitch right now. Pin comment down there to join me. It's going to be a crazy one here today, folks. I mean, absolutely insane. Much love and have a great day.